We make videos on side hustles, but what do you do with that money once you've made it? Most people would throw it in a bank account where they're actually losing 3% interest on it every year because of inflation. That's why investing is a great opportunity, and Robinhood is a great app to do it on. If you're new to that, or it's something you want to get into, we're here today to provide 7 tips for beginner Robinhood investors. Let's get started. Tip number 1 is to diversify your portfolio. This is really important, probably the most important thing I'll say in this entire video. But when you diversify, the weighted average risk for your portfolio is less than the sum for all of those assets. That sounds like a mouthful, but basically if you take the risk for each stock you hold and you combine them and add them all up for your portfolio, it's less than the sum of those. So when you hold multiple assets, you reduce the overall risk of your portfolio, which is very important. There's non-diversifiable and diversifiable risk. Diversifiable risk you can entirely eliminate by holding a lot of different assets. Non-diversifiable risk will always be there. In other words, it's not going to protect you against losses, which isn't my point, but it should minimize them. So instead of buying 10 stocks of Tesla, try investing 1 stock in 10 different companies, especially in different sectors, such as tech, healthcare, energy, entertainment, and manufacturing. Tip number 2 is to focus on ETFs and indexes when you first start investing. An ETF is an exchange-traded fund, and it's basically a collection of different stocks in an individual sector, like manufacturing, whereas an index is way broader, and it holds a ton of different companies. For example, the Vanguard Total Index is basically the US stock market. It holds a tiny piece of a ton of different companies in our economy. And when you're betting on it, you're betting on the US economy. It's a great place to start. You can learn a lot of different macroeconomic trends to begin with, and then expand out of that into individual stocks once you have a better idea of how the market works as a whole. Tip number 3 is to watch a stock for a while before investing in it. When you do this, you're basically taking the stock for a test drive and deciding whether or not you like it. You can read articles on their business model and some challenges they're facing. I even do this myself all the time. I recently wanted to invest in an electric vehicle company based in Oregon called Arcimoto. They have a really interesting business model, but after reading articles about them for a number of weeks, I became far more informed about what they were about and how volatile they were. So this is a huge recommendation for you guys. Tip number 4 is to decide how much you want to invest in the stock market and for how long. I see a lot of people download the Robinhood app and they only want to invest $100 or so, but they get really carried away and transfer a lot of the money from their bank account over because Robinhood really gamifies the investing experience. They make it super fun to invest in stocks and very celebratory when you buy or sell any of them. But what's even more important is to decide how long you want to invest for. There's a really interesting statistic which outlines this very well. People who invest in the stock market for 1 year have a positive return 74% of the time, but people who invest in the stock market for 10 years have a positive return 93% of the time. And people who invest in the stock market for 13 and a half years have a positive return 100% of the time. This really goes to show you the power of buying and holding. Because when you invest in a company, you should really be investing in where you think they're going and the vision for their future. Tip number 5 is to avoid options and day trading. Options is really only available if you have some experience investing on the Robinhood app, but the threshold to do that is still really low. And frankly, this is something that should be reserved with people with a ton of experience investing in the stock market. When you're trading options, it's very easy to get leveraged, and people can end up losing more money than they thought they even initially invested, which is very dangerous. In terms of day trading, what you're really doing when you do this is betting on the fact that the company's value will increase in the 24-hour period that you're holding their stock. I don't know how any financial analyst would do this, let alone a retail investor. And what I think a lot of people do when they're day trading is getting lucky. I see a lot of people try it, they make some quick money and they get hooked. They usually end up losing more money than they've ever made, and it's a path I don't want to see any of you go down. So tip number 5 is really to avoid day trading and options trading and focus on buying and holding for the long term. Tip number 6 is a quote from J. Paul Getty, who said, "Buy when everyone else is selling and sell when everyone else is buying." This isn't just a catchy phrase, it's the very essence of investing. And I couldn't agree more. I think that with retail investing, hype is becoming a more and more powerful phenomena. You see Tesla last summer being driven up hundreds of percentage points. And while a lot of analysts would agree that their value increased and their business model was becoming increasingly relevant, I think there was a lot of people who invested in Tesla this summer, mostly because they didn't want to miss out. They heard people saying things like, "I believe in where the electric vehicle market is going," which is a completely valid phrase, but they hadn't necessarily done their due diligence in researching who they were. This was especially indicative in Bitcoin in December of 2017. You see a lot of people investing in Bitcoin because they didn't want to miss out and they thought they could make some quick money. It reached an all-time high, but it came crashing down. A lot of people invested in it without prior knowledge of cryptocurrency or blockchain technology. They lost a lot of money because of it. Michael Burry is a great example of someone who buys when others sell and sells when others buy. He was a real-life person portrayed in the movie The Big Short, and he's a hedge fund manager. This last year, he actually invested in GameStop, a company which was trading at all-time lows, as a lot of people would agree it had a pretty irrelevant business model. But he took a deep dive into the financials, did his due diligence, and they're now trading at $13, which is over a 430% return. I think his style is very indicative of what a successful investor looks like, as they really look into the value of the company, and they don't care what other people are doing in terms of buying and selling. Tip number 7 is to try to actually learn some of the financial fundamentals of a company. This is very important, and it really indicates the financial health of a company. Robinhood also shows a lot of them next to the stocks they offer. For example, they show the PE ratio. This is the price to earnings ratio, which effectively takes the company's stock price and divides it by the earnings per share. What this tells you is how much an investor is willing to pay for $1 of that company's earnings. A high PE ratio can really mean two things. One, that the company's overvalued, or two, that people are anticipating really high future earnings growth. Amazon's PE ratio is 93, which is very high. People are expecting Amazon to continue to be a behemoth in the stock market and do very well. There's a lot of other ratios that are important as well. I think the PE ratio is a great example of which though. So definitely try to analyze these companies in a more analytical way, really understanding what articles say about them, but also what financial ratios say about their health. Learning how to invest in stocks in the stock market is a lifelong pursuit, but it's definitely a fun one. I hope this helped any beginner investors get into it and was useful. Make sure to invest in our channel by hitting the like button right down below and turning it blue. We also really appreciate your guys' comments, and as always, especially appreciate you guys subscribing. Thank you so much, guys. I'll see you next time.